If you are 65 or older, there is a very good chance you have been paying a tax bill that you no longer legally owe, and almost nobody has told you. Not your accountant, not your neighbor, not even the letter the IRS sent you last spring. Buried inside a massive piece of tax legislation is a set of changes that quietly wipes out or shrinks 5 separate tax burdens that have been draining retirement checks for years. Some seniors are about to see thousands of extra dollars stay in their own pocket instead of going to Washington, and most of them do not even know it exists yet. Stay with me for the next few minutes because by the end of this video you will know exactly which 5 bills just got smaller for you, whether you personally qualify, and the one mistake that could cost you every dollar of it if you are not careful. Let's start with the truth behind that dramatic opening, because I want you to trust every word of this video. In July of 2025, Congress passed a sweeping piece of tax legislation, widely nicknamed the Big Beautiful Bill, and tucked inside it was one of the largest tax relief packages seniors have seen in decades. This was not some secret backroom deal. It was signed into law in public, covered briefly by financial outlets, and then largely forgotten by the mainstream news cycle within a week. But here is the problem. Tax law is confusing. The IRS does not exactly send out a friendly postcard explaining how much money you are now allowed to keep, and most seniors are still filing their taxes the exact same way they did 5 years ago, missing out on relief that is sitting right there waiting to be claimed. So when I say the IRS quietly erased these bills, I mean it in the sense that matters to your wallet. The tax burden is gone or dramatically reduced, but nobody sent you a memo about it. That ends today. The first bill that just got smaller is the tax on your everyday income, the one baked into the standard deduction every filer uses. For 2025 and again for 2026, the base standard deduction increased, which means a bigger slice of your income is shielded from federal tax before a single dollar is calculated. On its own, this might sound modest, but it is the foundation everything else in this video is stacked on top of. Think of the standard deduction as a wall between your income and the IRS. That wall just got taller. For a single filer over 65, that base standard deduction for the 2025 tax year sits at $15,750, before we even add the senior-specific benefits I am about to walk you through. For a married couple filing jointly, that base number roughly doubles. This is money you do not pay tax on, period, no forms to fill out beyond your normal return. The second bill is one that has technically existed for years, but almost nobody talks about it by name, and it recently got a bump as well. It is the additional standard deduction specifically for taxpayers who are 65 or older, or who are blind. For 2025, that extra amount is $2,000 for a single filer or head of household, and $1,600 per qualifying spouse for a married couple. For the 2026 tax year, those numbers rise slightly to $2,050 and $1,650 respectively, adjusted for inflation. If you are single and 65, that is $2,000 stacked directly on top of the base deduction we just talked about. If you are married and both of you are 65 or older, that is $3,200 stacked on top. No questions asked, no income test required for this particular piece. This deduction has been sitting on the books for years, but a lot of seniors either do not know it exists or assume their tax software already handles everything perfectly, which is not always true if you are working with an outdated preparer or filing the same way you always have. Now, here is the third bill, and this is the one that is genuinely new. The one your accountant may not have fully explained to you yet if you have not filed your 2025 return. It is officially called the Senior Bonus Deduction, and it is a brand new temporary tax break created specifically by that 2025 legislation. If you turned 65 on or before December 31st, 2025, you can claim an extra $6,000 in deductions, on top of everything we just covered. If you are married and both spouses are 65 or older, that number doubles to $12,000. And here is the detail that surprises most people. This bonus deduction applies whether you take the standard deduction or you itemize. It does not force you to choose one or the other. It simply gets added on top of whichever path you were already taking. The IRS uses what is sometimes called the day before rule to determine your age for this purpose, meaning you are legally considered 65 the day before your actual birthday. So if your 65th birthday was January 1st, 2026, you would have already qualified for the 2025 tax year. This bonus deduction is currently scheduled to be available for tax years 2025 through 2028, which means it is not permanent, and if Congress does not act again, it could quietly disappear in a few years the same way it quietly appeared. That is exactly why claiming it now, while it exists, matters so much. Let's put real numbers on this so it stops feeling abstract. A single filer who is 65 or older, taking the standard deduction, can now potentially deduct $15,750 as the base amount, plus $2,000 for the senior additional deduction, plus $6,000 for the new bonus deduction. That totals $23,750 of income that simply is not taxed at the federal level. For a married couple where both spouses are 65 or older, you are looking at a base deduction of $31,500, plus $3,200 for the senior additional deduction, plus $12,000 for the bonus, for a combined total of $46,700, shielded from federal income tax. If your household income is modest, that combined deduction can wipe out a huge portion, sometimes nearly all, of your taxable income for the year. Now let's talk about the fourth bill. And this one is a little more indirect but just as real, and it is the one that tends to make people the most emotional when they finally understand it, because it touches Social Security. Many retirees do not realize that a portion of their Social Security benefits can actually be taxed if their total income crosses certain thresholds. It is one of the most common surprises people run into after they retire. Here is the connection. Because these new stacked deductions dramatically lower your taxable income before Social Security taxation rules are even applied, a large number of seniors are finding that their combined income now falls low enough that little or none of their Social Security benefit ends up being taxed at all, even though the deduction itself is not technically a direct Social Security tax cut. In effect, for a meaningful chunk of middle-income retirees, the practical tax bill on their Social Security check just shrank or vanished, simply because the income calculation that determines it is now working with a much smaller taxable number. This is exactly the kind of ripple effect that never makes it into a headline, but it shows up very clearly on your actual tax return. The fifth bill is the one that used to quietly punish people for daring to have a modest pension, a part-time job, or some retirement account withdrawals in the same year they turned 65, and it is the income phase-out structure attached to that new bonus deduction. In the past, plenty of valuable tax benefits for seniors were either all or nothing, or phased out so aggressively that a modest income bump could wipe out the entire benefit. This new bonus deduction phases out far more gradually, and the thresholds are generous enough that most middle-income retirees are not cut off entirely. For a single filer, the bonus deduction begins to phase out once your modified adjusted gross income crosses $75,000, and it phases out completely above $175,000. For married couples filing jointly, the phase-out begins at $150,000 and disappears completely above $250,000. That means the vast majority of retirees living on Social Security, a pension, and modest savings withdrawals fall comfortably below these limits and qualify for the full amount. That is not a small technicality. That is the difference between a benefit that exists on paper and a benefit that actually reaches real people. So who exactly should be paying attention here? If you were born on or before January 1st, 1961, you were considered 65 for the 2025 tax year under that day before rule, and you should be checking whether your return actually reflects all 5 of these pieces stacked together. If you turn 65 at any point during 2026, you will qualify starting with your 2026 return. If you are married and only one spouse is 65 or older, you still get a version of these benefits, just calculated slightly differently. So do not assume this only applies to couples who are both retired. And if you are itemizing your deductions instead of taking the standard deduction because you have significant medical expenses, mortgage interest, or charitable giving, do not panic, because remember, that new $6,000 bonus deduction still applies to you as well. It does not force you into the standard deduction to get it. Here is the mistake that trips up more people than anything else in this entire topic. A lot of seniors assume their tax preparer, their tax software, or even the IRS itself will automatically apply every one of these deductions correctly, without any extra effort on their part. Sometimes that is true. Often it is not, especially if you are using an older version of tax software that has not been fully updated, or a preparer who has not yet caught up on the newest provisions from this legislation. The safest move is to actually look at your own return, or ask your preparer directly whether the senior additional standard deduction and the new bonus deduction were both applied, and whether your income was correctly checked against those phase-out thresholds. It takes one conversation to confirm you are not leaving thousands of dollars on the table. I also want to be straight with you about the parts of this that are not guaranteed. That new $6,000 bonus deduction is currently scheduled to expire after the 2028 tax year, unless Congress renews it, which means the window to benefit from it is not permanent. Tax law also has a habit of shifting with new legislation, new inflation adjustments, and new political priorities, so the exact numbers you just heard for 2025 and 2026 could look different in future years. What will not change is the underlying lesson here, which is that tax relief aimed at seniors tends to arrive quietly, buried inside larger bills, explained in dense government language that most people never read, and it is almost always up to you to actually claim it. Nobody at the IRS is going to call you up and hand you money you did not ask for. If this video helped you understand exactly what changed and what you are entitled to, do one simple thing before you go anywhere else. Hit that subscribe button and turn on notifications because I break down exactly this kind of confusing financial and tax information in plain, honest language every single week. The kind of information that directly affects how much money stays in your pocket. Tax law changes constantly, thresholds shift, new benefits appear and old ones disappear, and I would rather you hear about it from me in 5 minutes than stumble across it by accident a year too late. If you found even $1 of value in this video, subscribing costs you nothing, and it means you will never miss the next update the moment it happens. Drop a comment letting me know which of these 5 changes surprised you the most. Share this with a parent, a grandparent, or a neighbor who is 65 or older, because odds are they have not heard a single word of this either. Thank you for watching all the way to the end, and I will see you in the next one. Before you click away, I need 30 seconds of your time. Everything you just learned exists because I dig through confusing tax law so you do not have to, and there is more of this coming every single week, changes that directly affect how much of your own money you actually get to keep. If this video gave you even one piece of information you did not have 5 minutes ago, hit subscribe right now and tap that notification bell, because the next update could be the one that saves you the most money yet, and I would hate for you to miss it simply because the algorithm did not show it to you in time. It is free, it takes 2 seconds, and it means you will always be one of the first people to know when the rules change again. Subscribe now, and let's make sure you never leave money on the table again.